RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief public video, or half hour or so summary of what we see happening in the market here today. I will say, actually, there's a few rumblings going on that make me feel as though we're out of the month of May, so I suppose that's a good sign. But these markets are, they're actually acting pretty firm in here. So they always say in this game, you want to have strong opinions lightly held. And I get the impression that looking for things like collapses in Bitcoin right here in the near term probably are maybe a little bit unwarranted. But anyway, we'll see how it goes. Only time will tell. As you see in our lower right-hand corner, this will be sort of our itinerary for today's conversation. And I kind of like having just a nice solid framework for you guys on these free broadcasts. So you can see exactly what's coming down the pike, and hopefully Brian refrains from all the ranting. I'll leave that for the after party, eh? Wow. Went off on a tangent yesterday, but oh well, it is what it is. And there's no end to the amount of stuff happening in this world that you can bitch and complain about, eh? Wow, what a mess. So let's try and stick to the script and keep this somewhere between about 20 minutes and a half an hour, and then we'll head on over. Today is Tuesday, which means it's Pentecook Day. We actually have Sior back. And he's actually got a whole bunch of really cool things on the go here, including things like TRI membership cards done on the blockchain and stuff. I'll leave that for him to talk about, but super. And more importantly, what I like to see is that there's a little bit of a fire in his eyes again, and he's feeling excited about stuff. So that's good. I'd also say too that quite a few of his names, I've been, of course, touting a few of his fundamental picks recently, which I think look very compelling down here. I suppose the only thing left is, are we actually going to start seeing some W's form on price? And then, oh boy, look out. So it should be a fun after party. It should be definitely worth your time and effort to participate, especially on Tuesdays and Thursdays with Julian. Get a nice, fresh, unique listen, view, perspective versus a whole whack of the Beamish. So if you can, would love to see you in the after party. And of course, we'll talk more about Sjord's fundamental portfolio picks and what he's got on his radar screen in depth then. Right now, let's go through our little itinerary. And like I said, let's try and get you guys on your way. So we did have that dead cat bounce that we kind of thought needed to happen in the broader market because breadth had just gotten so extremely negative there. We actually had a fast reading in the single digits there just a few days ago, coming out of the end of May. Jumped up smartly, and interestingly enough, the slow indicator now is actually just sitting right on this 40 line, so you can't even see it printed here. And really, more importantly for me, what's the histogram looking like? You can kind of see it's mixed bag. Commodities look a little bit weak in the short term. I suppose we'll talk about energy prices in a bit, absolutely collapsing. In a weird sort of way, though, number one, that's exactly what's supposed to happen in these greed cycles, is everything that I teach our students. And that cycle officially turned at the end of 2017, beginning of 2018. But of course, mysteriously, we had a little bit of shenanigans there with our entire society around the Great Reset and sicknesses and locking people in cages and all that kind of wonderful things. So the whole image, of course, was quite clouded. through the past 3 or 4 years. But you can, well, not you, I can see the greed cycle is kicking in, including, which should be interesting, but we should see the tech stocks and what are going to be sort of the nifty 50 leaders of this current generation. They should start to outperform, and you can see it. Mr. Softy and all those clowns all taken off here. And really, I wouldn't be surprised if we see a lot of that over the next 5, 10 years. And interestingly enough, uh, I'm starting to hear a lot of, well, not here. I don't know what the right term is, but digital currencies, real world assets put on the blockchain, that kind of conversation is gaining momentum. And I have a feeling every single one of us, we are all going to be on the blockchain our entire lives, including back in grade 1 when you pulled that dog's tail and you weren't supposed to, and you hurt the puppy's feelings. Your banker is going to determine whether you get a mortgage 20 years later based on how many dog tails you pulled. And you better watch your P's and Q's in this world. We are, unfortunately, one of the sad sort of side effects of this whole blockchain build out is we are now going to, in the past, you could sort of forget about your past, but there will be no forgetting your past now. Everything you do in your little human robot life will be tracked and monitored. And of course, you're going to have to pay your fair taxes, whatever the word fair means. Anyway, let's not open up rabbit holes and tangents and stuff like that. Let's stay on focus. I would say the broader market is kind of just sort of humming and hawing here. We're just sort of sitting here, kind of going, okay, do we break higher? Do we break lower? And we've got a couple things happening here in society in general that I think are actually going to help the consumer. One thing I did find interesting, Econs coming out today. We actually have the consumer right now very, very sanguine. It does make sense. The Fed wanted to try and slow the economy down, which means, of course, that's going to be more economic pain. And I definitely think that they have instilled a lot of economic pain into our lives. So much so that, interestingly enough, we do have potential problems floating out there where, like what we saw with the bank, there was that Silicon Valley bank that blew up, I guess, last year. There are a bunch more of these banks with all these unrealized losses just floating out there. A lot of these financial institutions are praying to God that the Fed can get to the point where they're actually lowering interest rates before the bell tolls for them. But I wouldn't be surprised. Like we do know that there is a major, there always is, every 10 years, there's a major financial calamity. They'll call it whatever they will to justify getting the taxpayers to put on more debt to bail out too big to fail nonsense. But we know that there's a problem in the commercial real estate industry. I would also say too, there's probably other cockroaches that we don't know about right now. The problems are brewing. There's no doubt about it. I think that the broader economy is starting to feel the pinch. The sort of runaway employment picture there following that insane sickness environment where basically money was free and people just went like drunken whores. I mean, I remember through the whole sickness environment, there were people on the site that just said, "I'm not paying rent anymore. Fuck it. I don't come after me. See what comes of it." And in my country, there were like government, programs where they just handed money out willy-nilly, free and clear. So what a surprise. It created a massive hyperinflationary environment that we're, living in the aftermath today. It takes years for these kind of interest rate policies to slow down economies. And in essence, I think you're seeing that. In fact, actually, I even put a tweet out. I think actually the report that really caught my attention today. I don't even know who these guys are, and I've been in this business a while, but there's economic optimism index. I thought this was really interesting image in that, ironically enough, and of course this is, is this commentary about politics. Through the entire time Mr. Trump was president, people were feeling actually economically more optimistic on a general basis, higher highs and higher lows. He put into place a lot of policies that were very pro business. And I think on balance, we were still living in the aftermath of zero interest rate world kind of idea. Jupiter Saturn cross happens. Interest rate, of course, picture changes with all that stupid free money. I mean, they basically blew up the balance sheet. You guys all getting pissed off at fucking, excuse my French, the Fed, money printing out the wazoo. And now this is the other side. And, this is an interesting commentary because they always blame the leaders. And of course, in my country, it's beautiful, but it's also tragic to see the absolute hatred for this Trudeau guy, considering the absolute insane inflation in our country right now. But this obviously is the United States, so people were feeling a lot better through the Trump years. And I got to say, looking at this image, Mr. Biden has been a complete failure here. And it's just lower highs and lower lows. If you were a trader, you would short this, right? Lower highs and lower lows defines a bear market. Look at that beautiful M right in the reload zone. I mean, that was like, and that's the irony of looking at these, any kind of fundamental data sets, is you quite often can actually see technical price patterns in that fundamental data. And that, of course, drives all the fundamentalists crazy. But anyway, so Mr. Biden has not done the public any favors with any of his policies. And I might even argue that, you know, a great reset, you will eat bugs and be happy, all that kind of fun talk. Is this coordinated by the people that are in charge of our world? Was this done on purpose? I get the impression that it was. And of course, the people that are in charge of this world, they're trying like the Dickens to make damn sure that this Mr. Trump guy doesn't come back. Well, we'll see how that goes. That might actually blow up in their faces, though, a la Civil War, but we'll see. We'll cross that bridge when we come to it. But I thought that was an interesting image. And what an interesting tell about the Trump presidency and then the Biden presidency. Just an absolute disaster. So the economy is slowing, down in the States, World Economic Engine. I think you see it all over the world. Did find it kind of tragic that, of course, it is the Tiananmen Square anniversary, and all the headlines are just simply about how the poor Chinese can't even talk about the fact that this even happened in their country's history. Hopefully, for the good people of China, like the actual Chinese people themselves, we can somehow move on from this horrible nightmare of these goddamn communist dictatorships, and those people can be free at some point down the road. But anyway, so that was something that I saw that caught my attention. I don't know how that plays out, but for anybody who's actually interested in the China story, and maybe I'll circle back in the after party. Fjord was very interested in that Baba. I have a problem with investing in Chinese companies themselves because of the CCP. But yeah, I mean, I can understand technically that Baba, and it has come down into a very interesting buying window here. So if you did want to participate in that, we'll talk about it in the after party. So let's see. We talked a little bit about econs. I mean, some, generally speaking, consumers not feeling too good. The economy itself, sort of a lot of talk about things sort of unwinding. Interesting on a minor note, Johnson Redbook here, retail sales still pretty damn strong. Backing down, I mean, this number should be like 3%. So there's no way in hell the Americans are going to lower interest rates here anytime soon. It's interesting to see what happens in my country. The central bank is being heavily pressured by the politicians to lower interest rates. And frankly speaking, I think if the Bank of Canada does lower interest rates, oh boy, look out, the Canadian currency could get absolutely destroyed here. Yeah, we'll see what happens. Only time will tell there. Okay, so we talked a little bit about econs, talked a little bit I would actually say, and I put out a report about this earlier. Um, well, not report, tweet, whatever. I don't know what the hell you want to call it. I mean, something significant is happening here, folks. And I don't think a lot of people in the public, of course, are paying attention to this. They very rarely do when these things actually happen. We'll hear about this after the fact. It is interesting, of course, that our society is completely dominated. The conversation's dominated now by inflation and how it's just destroying our society. And people are seeing this every single day, every single day, every single day. I'd actually maybe make the argument that that was yesterday's story. We did talk, of course, at length over the past 6 months about the very normal seasonal trade in energy, how energy is the most important component of the sort of price inflation sort of equation, if you will, for society. Energy always moves first. In 35 years playing this damn game, I've always seen energy move first. So it doesn't really surprise me that over the past 4 or 5 months, as we've gone through a very normal seasonal trade in oil, keep in mind, I mean, this actually has done everything that it's supposed to do, that energy prices went up appreciably. And I talked about this in our after party yesterday. That really, when are you supposed to buy your unleaded? Middle of February? When are you supposed to sell it? Middle of May? Wow, what a surprise. It's just basically business as usual. And thank you. And as you can see, energy prices are falling appreciably here. So why would we be even suggesting that inflation's not really a problem here right now? Because the biggest inflationary component in our society, prices are actually collapsing. Now, I don't know whether we can actually break through this support. What's interesting about this price chart is there was a really big gap here. This is a line chart, so you won't see that. But there's a pretty big gap here on the crude oil charts, right where we have basically stopped now. So we'll see whether this firms up. But I think on balance, the economy in general is going to feel a hell of a lot better with these energy prices. I mean, keep in mind, this is like, what is that? That was $86, $87 there a month ago. And here we are at 72. That's like a 20% drop in energy prices. I'm not going to call it deflationary. And if anything, this is where our inflation deflation gauge is so helpful. If we are above zero on this relationship, then that means we are still living in inflationary environment. I'm going to call this disinflationary. We're still going to have inflation. It's not going to go away, but the rate of the inflationary pressure should abate. And I think on balance, seeing the economic data coming out, like we said, the jobs market is starting to reflect what the Fed wants to see. The retail sales number is coming down, but it's not coming down enough to justify lowering interest rates. The question ultimately here is going to be how dramatic is this drop in energy prices? If we actually do go and, ML put in huge market structure tops, then I think actually, we might be in a situation. Keep in mind, this is the greed cycle. This is exactly when these commodity prices are supposed to drop. And crude oil prices are like the ultimate leading indicator in the commodity space. So this is encouraging. I mean, you heard me bitching and complaining about the inflationary pressures over this past winter and spring. Looks like that's abated. And we've also talked about this too. Mr. Biden, of course, wants to keep his job, although this economic optimism image that I showed you is going to make that damn difficult for him, because I don't think a lot of Americans really like him too much. Can't really comment. I'm Canadian. You all know what I think about my dear leader right now. God. So, that's obviously up to the Americans. But the impression that I get is if the Americans had their druthers, I think they would ask Mr. Biden to, there's the exit. Please help yourself out. The only problem is, what's the alternative? Anyway, might as well finish off this conversation with a couple points about crypto. I even tweeted it out yesterday, obviously in the face of, potential bank problems. People are going to run into crypto as sort of a man, get me the hell out of the system. The whole damn thing's going to collapse. What was that, 500 billion, whatever, in unrealized losses? That's going to have to come to roost at some point. Probably means a big bailout, and of course another big wave of inflation as they print more money for the bailouts. And of course, the end of this decade, that's what we're looking for this. But it is interesting to see crypto is catching a pretty respectable bid here out of this market today, while the stocks are kind of like, meh. So something else is going on here in crypto. And actually, I had pointed this out. And I don't know whether we have it on the little free thing here, but in the news, I was actually pretty impressed. There was a interesting article that I tweeted out about how the pension funds are actually starting to come in and starting to buy Bitcoin in earnest here, which did catch my attention. In fact, do yourself a favor. And it's interesting how Joe is from Marquette, because I don't know where the hell I put this damn thing. But I was pretty darn impressed with this interview. They're not coming in hugely, but keep in mind they manage so much damn money that even if they put like a 0.5% or something of their portfolios to work in the market, holy crap, that can really translate into some serious money. So, where are we here? This guy right here. So this gentleman, Professor David Krauss, really interesting conversation with his interviewer about Marquette and Wisconsin, of all places, coming in, and they put $168 million into the Bitcoin ETF. I don't know whether they're buying value or not, but they manage like 160, I think, $billion. So it's not really huge numbers, but still, it's $168 million coming in on the buy side. That's going to move the market. So I am seeing a lot of that kind of conversation. I would have thought that we would have seen a bit more correction in the Bitcoin price itself. But, the market's going to do any old damn thing it wants. And to me, this thing looks like it's trying to press higher. We still haven't really broken out. And I do have my fun little cute little shorts here, but I actually pulled the other order because I just want to let this breathe a little bit. If we do go put in another RAM, I can always add to the trade, but I've got the cute little short back on. And we'll see where this takes us. But, as long as I'm seeing W's here, that means we can start drawing bullish fog and bombs, and we should be looking for some sort of spike up top. We're not breaking out per se. Here's the old top of the range. We still got a lot of levels to bust through here. But in the short term, I'm just going to let this thing breathe here a little bit. And as you can see, price is moving up smartly. So we'll see how that goes. What I do find interesting is, if we look at actually the broader crypto market, this is where it gets interesting because a lot of these names have come into correction windows. We've been sort of talking about how through the month of May, maybe cool your jets. But as we start getting out of May and into June, we should start thinking about seasonal bottoms. Could we see a bit of back and forth here and some W start forming? We talked about that Flux a week or so ago. Still think he looks very, very good. I touted to you, Sjord's hello. In fact, I was even talking to him this morning about I wanted to go and get a position for Liam in that one. And there are interesting names like the Binance coin one. This is an interesting one. We don't hear too much about CZ, but look at that chart, folks. I mean, show me a new high and I'll show you. I don't know what's going on here, but BNB sure looks like it's catching a bid here. So I don't really want to stand in front of this right now. I mean, obviously, that's not going to be something that I'm going to be touting about buying. It's kind of nosebleedy here. If anything, I wouldn't mind just letting this settle down, put in a W on the other side of trend lines, and then, of course, away we go. But, we're getting into some interesting territory up here. So I kind of thinking that I would prefer just to let this market breathe a little bit here and see where the dust settles before we start thinking about like aggressively shorting and stuff. And happy little shorts here. Happy little shorts might just get busted out here. So we'll see how it goes. Only time will tell. Um, so with that said, as I said, today is Panic Cook Tuesday. Mr. Fjord, are you ready to rock these people's world?
Yes, I am.
All right. I don't know whether you heard that or not. He sounds like he's 5 million miles away. But
Oh,
let's
I
head on
am.
over and oh, there he is. Are you back? Oh, all right. Well, anyway, we're going to talk to him in the after party. So, well, actually, Matador, this is a bot that's working here right now. See, there's the 25 level, and she's reaching up into move stop to scratch level on that. So, it is an interesting anecdote. Are you a bull or are you a bear? I think I put out a note about a couple of weeks ago saying, I don't know which way this market wants to go. Does it want to be bullish? Does it want to be bearish? Of course, Brian, happy little shorts. I always like the idea of coming in and shorting against the top end of the range. I won't get busted out on this thing until we actually go and take out this top here. So we'll see. I mean, maybe this is the top. I don't know. But, if you're a bull, I mean, I guess you could make the argument that you were told to get long there at 69 and change, and you're about to be told to move your stop to scratch. So, there's always two different ways to look at every equation. And if anything, Stewart is an ultimate, well, what do we call you? Consummate bull. He's an optimist, which is good, glass half full. And as we've said repeatedly here, he does have quite an interesting basket, if you will, of fundamentally justifiable names to be invested in, and TRI, of course, is invested. I don't want anybody in the public thinking that I'm a crypto bear. We don't have time in this broadcast. We're just about at the end of this to show you the seasonal window. But keep in mind, we're basically in the absolute best possible window for risk-taking assets in the marketplace. And this goes on until the fall, winter of 2025, 2026. So, when this correction is done, I hope you're all ready because this could get absolutely crazy again, like it does every 4 years. So on that note, hopefully I've set Stuart up here for success. Should have an interesting conversation with him here today. And also, too, we'll talk a little bit about site development and, of course, how wonderful this situation is for poor old Stuart and his family on the ground there in the Netherlands right now. But that's the fun part of the conversation today. So, all right. Okay, why don't we leave it at that? Have yourselves a great day. Slow and steady wins the race. As I said, if you are a consumer, we actually got some information here today that I think is incredibly significant. They are getting finally in front of this inflation problem. Now, how bad does the economic contraction have to get? I don't think we're ever going back to the old pricing. This is the great reset. This is you will eat bugs and be happy. Get used to it. This is our new world that we're inheriting. Thank you, baby boomers, for completely mortgaging our future. So the question ultimately here is, can we at least take advantage of this disinflationary window to go and make a ton of money speculating on like little venture cap ideas a la altcoins here and be able to disconnect from the system? Because once we get to the end of 2020, well, probably the end of 2026, then we're right back in the soup and things could get really ugly. Probably when that massive banking crisis that's sort of looming out there finally hits. But that's not today. So let's go have some fun with Fjord. Let's get educated on what might be a good place fundamentally for us to be thinking about putting our money to work. And does the technical picture agree with that narrative? All right. Have yourselves a great day. Slow and steady wins the race. That's damn straight. Klaus is very happy. I have not gotten to the point of eating bugs yet. I really don't have any plans to do so. But I'm sure the day that you see Brian chowing down on bugs, Klaus will be even more happy. All right. Have yourselves a great day. All the best. BMA for the win. Slow steady wins race. Remember what your number one job is. Don't take out only one nickels. All the best. Bye for now.